Well, good afternoon, everyone, and thank you for joining us. Firstly, we just want to thank our sponsor for the stage, Prudential. In hearing just the conclusion of the last panel, I think there are a lot of themes that this next panel will be able to explore in a bit more detail. Topics around business model innovation, exploring adjacencies, removing friction out of customer processes, and certainly the context of how do we raise awareness and an understanding, particularly in markets that perhaps present great opportunities for the insurance industry to grow. So certainly those that capture the essence of financial inclusion. So I'm delighted to have quite an esteemed panel with me, representatives from the InsurTech industry. Each of them are very unique, and I think that really presents a great opportunity for us to explore some of those differences as we have a panel this afternoon on the topic of InsurTech and the next frontier. In discussing this panel earlier on with my colleagues up here, we did reflect on the point of how many of you in the audience are actually working in the insurance industry, and perhaps just to help us a little bit, show of hands, how many of you are actually currently working in the insurance industry? Great. That's a good majority. I'd say that it's about sort of 80% of you. How many of you are InsurTech entrepreneurs? Okay, we've got a few. Perhaps next year there might be a bit more. So look, I'm going to quickly move into introductions. Each of the panelists will introduce themselves. I've got some questions to kick things off. We have the ability to take questions from the floor. I'll be doing that over the course of the next 40 minutes or so. So I do encourage you to start thinking about some questions. I think another point of reflection from the panelists earlier on is that often InsurTech can be the sort of unloved brethren of some of the other areas of FinTech. And certainly we want to use this as an opportunity to debunk some of the elements around insurance. Now, clearly, technology and insurance are long-time bedfellows. We're seeing the emergence of a number of different technologies that are bringing rise to new opportunities, both around business models and in improving the customer experience. We're going to explore those over the course of the next 40 minutes. One of the things that I think it is equally valid to point out is that while there are some specific issues and opportunities from an InsurTech standpoint, there are clearly a lot of horizontal dimensions that cut across a number of different areas of InsurTech. When we look at InsurTech investment globally, last year was $13 billion in US dollar terms was invested in InsurTech. So that's about 15% of overall investment in InsurTech. Of the top 100 FinTech companies, now 12 of them are InsurTech companies. I think the other observation I would share is we're seeing more propensity for InsurTech companies to be partnering with insurance companies than perhaps we've seen in other areas of FinTech. 3 of our panelists today are actually enabling InsurTech companies, i.e. they work in partnership with insurance incumbents. So without any further ado, I'm going to ask each of the panelists to introduce themselves and their organisation, and then we'll get into the questions.
Hi all, Alex Schmelkin. I am a Chief Revenue and Marketing Officer for Unqork. Unqork is a no-code fulfillment platform, and we operate in the banking and insurance industries. For carriers, that means that we are their front door to distribution and customers. Essentially, we take in applications from any source, as well as servicing requests from any distributor or customer, and they could be in any format, including legacy formats like paper. And then on the other side, for distributors and customers, we're their gateway back into the carriers to apply for insurance using digital means and to participate in automated underwriting.
And Rohan?
Hi, I'm Rohan Kumar. I'm the CEO of Toffee Insurance. Toffee Insurance is InsurTech based and operating out of India. We create singular focus, bite-sized insurance products which range across categories of health and non-health. And typically products like dengue insurance all the way to bicycle insurance. We co-work with our insurance partners to create these products, and subsequently we work with channel partners to drive context on adoption of these products.
Hi, my name is Peiru, and I'm the CEO of KeyReply. So we are an AI company, and we use natural language processing to build virtual assistants or virtual agents, which can come in the form of chatbots or voice bots, right, to help insurance companies, healthcare companies, and governments to automate not just their the customer conversations, but also internal conversations. So we've helped tons of companies being able to save millions and millions of messages and automation, end-to-end automation with their customers and internal processes. So I think we can share a little bit more about that later. Yeah.
And Tom.
Hello everybody, my name is Tom Ludescher. I'm the CEO Asia for Entsia International. I'm really glad to be here. Hello everybody. Entsia is an insurance distribution and orchestration platform. So what we are doing is we link up insurance companies and digital channels and orchestrate the messaging formats in between. We have a wonderful panel here with people from the US, from India, from Singapore, from Europe, and what all these people would know is that when you want to charge your phone and your notebook, you have difficulties with your power sockets. So we are basically for API insurance. We are your travel adapter. With Entsia, you can easily integrate any sort of digital channels, including bank assurance or ecosystems, and then link them up with legacy systems from insurers or modern platforms, and we orchestrate everything which is happening in between.
Well, thank you, everyone. So we're going to get into it. I thought we'd start big picture, and particularly from a global insurance perspective. So, Alex, I'm going to ask you first your perspective on some of the structural trends and changes impacting the global insurance industry.
Sure. You know, I think a lot of the change and the structure of the industry is starting with customer expectations. We all are beginning to have expectations of our insurance the same way we do of our mobile devices and our retail experiences. There's no other product, I think, that any of us buy where you somewhat get a price for what you're about to get. You fill out a paper form, you actually sign it with a piece of paper, you give blood and body fluids to someone you don't know, and then maybe 90 days later you actually get the product that you wanted. We don't put up with that anywhere else in our lives, and I think the fact that customers are now expecting a much more digital and retail style experience is dramatically altering the industry. And another area that I think we're all experiencing significant structural change is the technology, the artificial intelligence, the data that large carriers and small businesses can get access to now is so much more affordable, is so much easier to implement, that there's a leveling of the playing field. And it's no longer just these massive incumbents that are actually being successful. Anyone can now get access to this style technology, and I think we're going to see a lot of the innovation like we saw in the retail and e-commerce markets about 10 years ago start to invade their way into insurance.
Great, and maybe Tom, just to get your perspectives on the same question.
Yes, so when we have a look at the structural changes that are happening these days, we see one dominant trend across all the financial sector also affecting the InsurTech industry, and this is the rise of platform and ecosystems. So what's different between ecosystem platforms and the traditional value chain is that on a platform, in an ecosystem, the center is all about the customer, and the customer is very willing to share information, and for insurers it's really up for using that information now for underwriting, for coming back with a proposition to the clients that is much more tailored to the insurance needs, and also to make sure that you can do that in a very seamless and on-the-spot basis. Because platforms, they are known for immediate purchases. People are not prepared to wait in e-commerce or even in digital banking to get an acceptance for what they apply for. They want immediate acceptance, and also for insurance, that's clearly the way to go. So for these sort of platforms that are arising, I think it's really about bringing the insurance underwriting to the data, and not like with the traditional approach to basically pool all the data and then try to figure out something with it. So we see now a trend in the market that underwriting really goes to the client and offers the client with a tailored underwriting, a much better customer journey, and a much better customer experience.
Look, I think one of the themes that's consistent already through the festival has been making a real difference to real people in real economies. Rohan, I might ask you just in terms of your InsurTech and what customer pain points you're looking to address.
Yeah, no, it's interesting what Alex just said. You know, there are a lot of structural changes that are happening globally right now, and sort of a lot of progressive thinking and emerging technology is coming into the space where InsurTechs are starting to look at solving this problem in a new radical way, unlike the traditional incumbents. Specifically for Toffee, we've sort of looked at 3 pain points for a consumer, and we started with sort of the products in itself. Traditionally, products have been created in such a complicated manner that most end consumers don't end up understanding the construct of that product. Yeah, there's too much jargon, there's a whole list of inclusions, exclusions. You never know what you're going to get covered for, you know, when you're at the hospital, or what you're going to get denied for when it comes to claims. So our premise was to really start to deconstruct products to begin with. And so we look at a sort of portfolio of features that a product has, pull out the most relevant sort of features from that and create singular focused products. An example would be a dengue insurance. So the insurance only kicks in if you are diagnosed with dengue, and that's it. So it becomes very easy for a consumer to sort of understand that product. And this also does another thing, which is it drops the overall pricing for the product from being a $500 product to a $10 product. The second problem that we try and solve for is the efficiency of the transaction, both from the issuance of the policy all the way to servicing and claims. The mistrust in this insurance ecosystem has sort of been created by the legacy and the redundant processes, which require paper-filled applications, sending in your receipts for reimbursements, waiting for claims to get approved. So we've sort of done 2 things. We've done real-time integration, both backwards and forwards. Backwards with our insurance partners so that every time you buy a policy, your policy is issued real time to you. And second, it's also on the claims side of things, we've removed sort of the redundant processes where we're saying, look, you already have a smartphone with you. Can we utilize that to capture the medical bill, the medical summary, your ID, national ID card, and basis of that, can we sort of process your claims within the sort of 24 hours? Should you need to wait for a $50 claim to be paid out in 3 weeks? Makes no sense. So sort of solving for the efficiency bit. And the third one, which sort of stuck close to our heart when we started with Toffee, was insurance without context is extremely difficult. So, and we've seen this with mobile phones. We've seen this with travel. If there is no context, people just sort of don't end up relating to insurance or the need to protect themselves from scenarios. So what we've done is we've created these products and we've found channel partners which are driving context for those products. The example would be, so we take our dengue insurance product and we sell them through pharmacies and clinics. So when somebody's walking in, let's say a mother who's walking in to buy a mosquito repellent for her kids is able to buy a dengue insurance at the pharmacy counter itself. So this sort of changes the way you start to perceive insurance, where typically you would have gone through a form-filling exercise, sitting with an agent, understanding your needs, et cetera, et cetera. So sort of 3 big pain points that we've tried to solve in our approach to serving this underinsured market in India.
And Peiru, perhaps just to pick up on some of those pain points, as an enabling InsurTech looking to address some of the issues that Rohan's just mentioned. You at the beginning of your describing your company, you spoke of AI, natural language processing, chatbot solutions. So perhaps you can tell us how you're looking to apply those technologies to those issues.
Yep. Right. So there are 2 areas that a lot of companies that we work with look at. Number 1, customer acquisition, and number 2, customer retention, right? So in order to do these 2 things really well, there are 3 main factors that people look at. Number 1, they look at knowing your customer, right? After you know them, how do you provide them value? And then how do you engage them, right? It's interesting that I was reading an article or research paper by IBM. They were saying that only 37% of customers think that they can trust their insurer. Right, and more than like 57% are willing to buy from a non-traditional insurer because they feel that they can reach them faster and their turnaround time is much faster. So I think this is a very important point for all insurance companies to look at, right? When you talk about getting a response, right? When do you want a response, right? Most people say they want it yesterday. Right, you don't want to wait 3 weeks for a response or 2 weeks, right? And not just that, right? People text you, they Facebook message you, they WhatsApp, they do whatever they want. You don't get to choose what channels they want to use. They choose whatever channels they want to talk to you. And if one one customer texts you or maybe message your agent or goes to your app or does something else, right? Do you actually know that all these requests belong to the same person? Right, and I think knowing your customers this is where we come in to make sure that it's not just the are you happy, give me 1 star to 5 star kind of thing, or are they churning, right? What about the qualitative data that they are giving to your company? You don't get, as a company, you don't get the qualitative data that's very rich with customers' information that what are they talking to your financial advisors about, right? These are very, very important data that the company usually doesn't get to see. But imagine what if you could consolidate all these different channels and have access to them and be able to analyze all this qualitative data, this rich amount of data pool that can really help you understand your customers from a very, very deep point of view. Imagine what kind of understanding you can know rather than just knowing what you have on paper, right? And I think customers, not just customers, insurance companies nowadays, let's talk about customers. They don't just have the end customer in mind. They have many different stakeholders that they need to work with and please, right? Not just end consumers. They also have their financial services consultants or agents that they need to work with. They also have their partners or distribution points and internal staff as well. So what we did with one of our clients was that we handled their knowledge management and be able to segregate their knowledge base so that the one virtual assistant can, through one brain or one language model, answer the agent or the customer or the internal staff based on who they are. Right, so that's where we really talk about scalability of your knowledge management and how you give information to all your different stakeholders and how do you do it fast and scalable across maybe different geographies, and that Southeast Asia or the world, tons of different languages. How do we handle that, right? Multiple languages, mixed languages as well. I think these are very interesting things that we should look at to make sure that we have a very scalable turnaround and customer understanding in the long run.
One of the trends we're seeing more broadly from a fintech standpoint is this evolution from B2C to B2B propositions. And Alex and Tom, you're both in that particular space. Maybe Tom, starting with you, your perspectives of this from an InsurTech standpoint, that collaboration that's occurring more increasingly between companies such as yours and those that are in the audience.
Yes. So what we see right now in InsurTech is very similar to what we have seen a couple of years ago in e-commerce and then later on in e-banking, in internet banking, that basically the digital savvy customers, they start first on the retail side because they're more open to test new distribution channels, to go direct, for instance, but also to go for more digital means of intermediated distribution. Then usually the B2B is following, not only because the business buyers are usually a little bit more patient in testing the new technologies, but mostly also because they have much more complex products. When you have a look at today's retail products, they are still quite simple unless you go for a complex lifestyle product. When you have a look at the standard insurance coverage for an SME, that's highly complex. An SME has different covers, so you're dealing with multi-risk type of covers, and you need a system and also you need a distribution partner that is capable of handling this complexity. And I think it's very exciting these days that now also in this field we see a lot of activity in the past 12 months, particularly for the small business and the SME space that used to be a bit underserved. We see now a lot of movements coming in from the bancassurance channel also, as well as from specific digital marketplaces. So this is basically the complexity of the products. What we also see, which is important, I think, is the way how do InsurTechs and insurers for B2B and also for B2C collaborate. And there we see that in the past, the biggest disruptors that really said, well, insurers, we are going to make you redundant, they were more in the B2C space. And that's also the same like in FinTech and in e-commerce. And for the B2B, it's from the beginning much more on a collaborative model. And the collaborative model in the B2B is required because the value chain, of course, for B2B insurance and insurance distribution is much more complex, is already today more fragmented than in retail. And whenever you have a fragmented value chain, this opens up great possibility for collaboration. But on the other hand, also a big need for integration, orchestration. And this is basically something that we have started doing business with as Entsia. So our first product that we did was complex packages for SMEs, and distribute them through digitalized broker systems that all come with their own architecture, they come with their own messaging standards, APIs, and so on. And so for an insurer, if you want to deal with this complexity, you need to accept not everything is as simple to sell as a travel insurance. So you need to be able to really get cover specific products, even tailored on spot with the technology solution that you have at hand. And then it doesn't really matter whether you sell it through a broker, digital marketplace, through a bank, in the bank assurance channel, or through an ecosystem partner or an e-commerce platform. These are all different technologies, but your product is the same. So if you're capable of bringing your product into these different distribution standards and APIs, then that's the way to go.
Alex, your perspective, clearly you're a B2B in the CX, customer acquisition, onboarding space. Contrary views or consistent views with Tom?
I think mostly consistent, Tom, and I agree with a lot of what you're saying. The way that we see the market is, at least in the U.S. and the life markets, an agent assisting your sale is still well over 90%. In parts of Asia, it's over 50%. Europe is similar in certain markets. And I want to focus on that bigger part of the market to start. A lot of InsurTech, and very successful InsurTechs, mind you, are going direct to customer. And I think that's great, particularly in markets where there's the need to get to the underinsured and there's the need to get great new technology and distribution out there. But the traditional players, the large global carriers, at least from the Unqork perspective, that's where we've started to apply our energy. And we like to think of it as a B2B2C model. We're working for one global carrier that we are helping to give them technology to enable an agent to have a better experience with their end customer. Is that B2B? Is that B2C? I think it's a little bit of both. The example here is the agent drops a ticket for an insurance product, let's say the traditional way, but then rather than the agent fulfilling the rest of the sale, Unqork can send a link directly to the customer on their phone saying, hey, an agent just tried to sign you up for this product. Why don't you finish the application right now? Answer some of these medical questions on your phone, sign it right here, maybe schedule some other tests that you need to do. So I believe actually that the InsurTech market and the technology market specifically should be thinking about ways to make existing carrier operations smarter and better, obviously in service of the end customers.
Before moving on to the next question, again, we'll ask this question, but then we'll come to the floor for some questions. So if you've got any, please be prepared to enter those through your mobile phones and the conference app. I want to shift now to emerging technology. There's a lot of noise. And Peiru, we might start with you. Clearly there's a lot of promise around emerging technologies such as AI. I think we've already covered the criticality of having the data that can enable and prosecute those strategies. So your perspective around how real it is for many insurance, particularly incumbent operators, to be moving down the path relatively quickly to an AI-enabled world.
Well, perhaps I'll offer something that's a little bit, I wouldn't say traditional, but a little bit less expected, right? I think currently for a lot of insurers, it's not about how cool or how cutting edge the AI is, right? Talk is cheap, right? To actually do that, that's the tough part. Do you have the right people in your team who understands AI or understands what it can do, right? Because for most customers, right, what we see is that they either think that it's magic or it thinks that, I don't trust it, right? So it's either two ends. It's very rare to find companies who have a pretty good understanding of what it is. And I think it's very important to have a understanding that AI changes very, very fast. What you think cannot be done today, 3 months later, 6 months later, it could be possible by then, right? So I think what I would like to share is that I think for many companies, if you want to plan, think about it as a solution as a whole. What we see in quite a few insurance companies that are trying to move to the next step is that they are trying to give customers the end-to-end experience, right? So obviously what we do is that we build virtual assistants for them, right? Besides just giving FAQs, right, which I think it's a very 101 right now, what can it do that to help customers perform transactions end-to-end and get immediate gratification, right? I think that sounds easy, but it requires a lot of back-end integrations. All the APIs has to be ready, the orchestration layers, right? Everything has to be ready. And of course, not just that, right? Regulatory-wise, I think Singapore is quite forward in terms of policies, etc. But sometimes it's the company's own IT policy or risk policies that might hold it back. But there are many technologies that can bring it forward, like a combination of a solution like AI in natural language processing, not just in understanding what customers are talking about, but also in knowledge-based management and also in extracting of data from very complex policy documents as well, right? Helping to make insurance more simplified and easier to understand and greater transparency in that sense. And combine that with other things like optical character recognition, voice recognition, all these technologies, right? Some computer vision to be able to take pictures of, say, a car crash, right, and be able to tell how damaged is the car, right? These are things that can be readily available. The technology is there, right? But the policies might not be ready for implementations of these technologies. And most of the time then, some companies will say, since our policies can't match up, we'll just not do it then, right? So I think, there are many parts of AI. I think natural language processing is catching up a lot, but in many other ways, I think not just RPA as well, robotic process automation, this part of AI, optical character recognition, I think these three put together can yield some of the greatest ROI for your investments in technology.
And Rohan, I guess as an InsurTech B2C proposition, what are the technologies that you think offers the greatest potential for you to prosecute your business model?
I think it's very interesting, right? So I take a slightly different view on this one, which is at the end of the day, it's all about the consumer. So any technology that helps tie the consumer experience together is what's sort of going to be successful. And we've sort of seen this with a view that internally we have a very fragmented view of saying we should try and use machine learning and artificial intelligence or blockchain methodologies, et cetera. But to the end consumer, it doesn't mean anything. The end consumer is looking at the efficiency of the transaction as how easily can he buy the product, how easily can he pay for the product, and how easily is the service or the claims process in and around the product. So any technology sort of that powers that customer experience and ties it all together is going to be sort of the future for the next 12 months. We've seen, at least in the subcontinent in India, where we're looking at about an uninsured audience of more than 500 million people, that the technology adoption is very fragmented. So you might start with someone who is extremely tech savvy, has a smartphone, all the way down to someone who's sitting on a feature phone. So how do you make the consumer experience consistent across these two sort of segments? And what is sort of that technology that will help you enable that? The second piece I want to add to this is one of the biggest challenges that we face as a business is the lack of data. So any sort of, and going back to what Peiru said, that any sort of processes that can help you extract a lot more qualitative and quantitative data about the consumer set will help you construct products in a much more easier fashion. You will price them more competitively, unlike traditional approaches where you are pricing products based on loss ratios from the previous years. So the access to data allows you to experiment with new product constructs, with pricing, with new segments, and new approaches in driving sort of the technology required for a better adoption and really going after the uninsured space.
Great. So I might just now turn to questions from the floor, if we could have them made available. Okay, they're just coming through now. Okay, there's an anonymous question. If you could improve one area on how to work with incumbents, what would it be?
I'm happy to go with that. We actually get asked this question or a variant of this all the time, and I'll try to give one, but I think it's you might have to unpack it into a couple of different areas, a few pieces of advice on how to work with a large incumbent. And it starts with radical speed. If you show up at an incumbent, a traditional player, and say that you're going to get their new product or their new distribution strategy to market at the record time of 3 years, which is what they're used to dealing with, then you've already ended the conversation. We show up and we're live in 8 weeks, and someone hears that and they say, too good to be true, I don't believe it. And we say, I'll show you. Look at some of our case studies, we'll demo the platform, we jump out of the slide where we stop showing them PowerPoint and we say, we're just gonna build your product. So I would start with this radical speed concept, and what that requires, though, on behalf of the carrier is definitely a willingness to work in a different fashion. And part of the reason why so many incumbents, so many carriers are unwilling to do that is this myth of their legacy systems. We hear it all the time. I can't do that. I have a complicated legacy. It's a 40-year-old assembler system that 25 people at most know how to maintain, and I can't get data in and I can't get data out. I think that's fake, because I actually think that's just some C-suite exec or some SVP that's unwilling to write off that really old technology. We have to not be fearful of the write-off. The well-placed write-off is one of the best things you could do for your corporate earnings that quarter. Because it means that you've actually figured out a way to find a new technology and to inject that into the discussion you're having. So I think the combination of speed with the fact that this legacy problem is a myth, there's always a way to work around it, is one of the best ways that you can work with the traditional.
Any other comments from the panelists on that? Tom?
Maybe I can add here one, which is more about how does an incumbent feel about innovation. And we see a lot of innovation programs going on. You have new roles being created in large companies, fostering innovation, new office spaces, and a lot of fancy stuff. But at the end of the day, it's really about jump in the pool with new products. And what we see in other industries, particularly in e-commerce, but also for smartphones, is that companies are very willing to do beta testing first. And then you have it maybe, if you're lucky, you have it 80-20 already right, what you need to have, and then you fine-tune it. And that's something that incumbents are still struggling with today. And of course, this is particularly because of the legacy systems, because they know they are not like a speedboat. Incumbents are more like a cruise ship. Cruise ship and speedboats, they can both drive at very high speed, but the difference is how long does it take you to get there, and how long does it take you to hit the brake when you see something is wrong. And of course, as an incumbent, as a cruise ship, you need to know well how you manage that long distance. And for me, it's the beta testing. If you accept, basically, take a risk, know that with the agility that you can have by adding the right technology to your legacy system, that you can get the agility, the customer centricity, but also the cost efficiency that you need, which has today become the standard in the platform world, for instance. If incumbents also go along that way and become themselves a bit more like a platform, that's probably what I would want to see from incumbents, be a bit more adventurous, but also get the right control measures in place that it doesn't hurt when you have to correct.
Okay, we might pause on the questions and go back to the panel. Actually, there's a few more questions here. What do you reckon? I might actually go to... we might go to the question around specific examples of alternative data points. I think there's clearly been a lot of discussion around getting access to data. So what are some specific examples of alternative data points, and how could this help underwriting?
Okay. So interestingly, because we run some virtual assistants for some insurance companies, right? And it's quite interesting when we piece and we try to identify who they are, who these customers are or prospects are, and we try to pinpoint what they say over maybe a period of time, right? And we realize that maybe sometimes when they come and they're like, oh, I have a kid, I just had a kid, what should I look for? Or maybe 1 month later they come and say, oh, they ask something about their house or something. So you roughly, if you can piece all these things together, you will roughly get a good idea of this person's life cycle and what you should be selling, right? And so these are generally not through like the traditional channels and things like that. Like, I just give you an example, right? I just got a call from one insurance agent who prospected me 20 years ago when I was a student, and he called me to wish me happy birthday and to ask, how's school? Because 20 years ago, I was still a student, right? So I was like, okay, that's obviously not keeping up with what I am, but that particular company, I actually went to inquire about their services through another channel before. And if they identify that it's the same person, and now the me now has a different profile, I'm looking for different things, and if they put that together, they would have known that I'm no longer a student. They could update their profile and start selling me more relevant things, right? So I think this is one example that we are sharing, and across and we're talking about omni-channel as well, not just what they type, not just what they write and what they surf, right? Some insurance companies we're working with, they're trying to combine that with web surfing behavior as well. Maybe this person currently is surfing tons of baby sites, right? Or surfing tons of maybe retirement sites, right? Then perhaps based on what are the questions they're asking, not to your agents perhaps, but through your other channels, you can piece all these things together and find that, maybe that really helps you have a very holistic view of your customer that's not through traditional means like a survey, for example.
And we do thank Mark Zuckerberg for that question. It's fantastic. It's amazing how many people are coming to these conferences. Perhaps just to shift back to some of the questions, if we can. Okay. I guess we've touched a little bit on some of the constraints. What are some of the enablers that we really need to see to have InsurTech, I think, rightly take its position amongst some of the more sexier elements of FinTech? So, Alex, got a perspective on that?
Sure. I think that it's actually almost a play on the incumbents question as well. So we heard, Prudential on the main stage this morning, and it took some courage to say, we as the largest global life carrier, we finally admitted to ourselves, we don't have to do everything ourselves. There's an ecosystem of platforms, and there might just be some things out there that other players are doing better. And to me, that's the trick to figure out how to enable InsurTech. I want to bring to market something that we can do better than the carriers. A carrier need not be the best at NLP. A carrier should not be the best at OCR or at intake technology or even running their underwriting rules. They should reach out to people who are best in class in that, allowing them to actually focus on what's truly differentiating, what will make a carrier more competitive than others. And I propose it's actually very few things these days. It's probably not their ability to themselves create some of this innate technology, but it's their underwriting rules. It's their distribution relationships. It's probably the way that they service some of their customers, almost a return to the insurance carrier of 150 years ago, and leave a lot of these other things that we could probably do better than the carriers can themselves, and offer it to them as a utility. So I think that when you focus on that core competitive advantage and the carrier strips away everything else, it's probably one of the best ways they'll enable bringing InsurTech technology into their business.
And Rohan, your perspective, I guess, around customer adoption as an InsurTech B2C provider, what are perhaps some of the biggest constraints for you to sort of scale your business?
So look, the constraints for us continue to be sort of the fragmented technology adoption across, right? So trying to create a consistent user experience across a tech savvy to a non-tech savvy. What kind of technologies do we utilize? In some cases, voice makes more sense in small town rural spaces versus where connectivity is low for application downloads. So sort of really figuring out the consumer pain points and understanding what works for him or her. What we've realized, and sort of going back to our core proposition, what we realized is sort of one technology sort of that's gone deep into the interiors of our country has been WhatsApp. And they might not have emails, but they are transacting or conversing on WhatsApp at high rates. So can we leverage sort of that ecosystem to introduce the product adoption rather than trying to sort of take a backseat and saying, look, we're going to try and do these products and push it through sort of this technology through an application where somebody has to go fill a form or an agent has to go physically see that person. So really starting to understand the consumer a lot more intimately before we sort of come up with a solution. And sort of that's going to be that's continuing to be a challenge in a sort of a population this large. It's sort of one segment at a time for us, and that's why we continue to sort of put a focus on.
I think we've already touched on the point around I think one of the questions from the audience earlier on was around partnering. But Tom, perhaps just another question to you more specifically. Clearly you made reference to the fact we've got a geographically diverse group here. From the perspective of your business, and I know you're obviously working now in a few different markets, is there much to be said for the maturity of different insurance companies in different markets and their propensity to actually effectively collaborate with organisations such as yours?
Yes, I think when we have a look at where InsurTech is coming from, I previously mentioned that at the beginning you had revolution. We are changing the world, we are making insurers redundant, but if you are in the revolution business, then you need a very deep pocket and a very long breath, otherwise you cannot scale quick enough that you can really scale into something meaningful. And that's why we see these days really the collaborative model as the dominant model, and we are of course, as being part of this ecosystem of InsurTechs, we are a very, very big supporter of the collaborative model, and we contribute in the collaborative model the interoperability. Because collaborating means you need to understand each other and you need to be able to easily and cost efficiently integrate with each other. And what we see, for instance, in Singapore, which is a small market, but I think a leading market worldwide from an InsurTech point of view, is that we had with the Apex, the API exchange launch, for instance. That's an extremely important initiative, bringing parties closer together. We've also, with the MAS, very actively supporting collaboration, not only with the FinTech Festival, but also with some specific industry initiatives where they bring at one table tech players and insurers. So there's a lot of effort into collaboration. And for me, this is really a guiding light of how it can work. We don't see that everywhere, so we are active in many markets worldwide, and I would say it doesn't matter whether it's in other parts of Asia or whether it's in Europe or in the US. I would say the support and the support probably from the regulator is there, but not as active. But in general, we see in all the markets today really the will of collaborating. And now what does it mean if you have found the will to collaborate? It still doesn't mean you can collaborate. So parties really have to work now on the interoperability, on the integration, and find a way how to easily onboard new ideas. When we have a look at the insurance industry, 200 years old in the sense that we know it roughly, the products and also the way how you underwrite still remained pretty much the same. And so now it's with all these innovative ideas available, it's now really the incumbents' chance to get them on board and create a structure that is really an agile, dynamic structure. And a follow-up here on Alex's very important comment about how to make incumbents agile. And this is really about creating the digital environment that easily allows you to onboard, if it's not successful, of course, InsurTech players for collaborating, test it, be brave, have your foot on the brake, that you don't miss the point that you should not miss when you want to brake, because you have to correct something. And that's basically what we see in all markets going on. So from a collaborative point of view, I must say, I'm very, very positive. And when I see what is happening today compared with 5 years ago, we've gone a long way.
Okay, we might again go to questions from the audience, if we can please have those. Okay. Okay, maybe the one on millennials. See if we can bring that up, please. So I guess the genesis of this question is around the future customers, that is the millennial generation. How will they drive the InsurTech evolution? So I don't know, Rohan, do you have a perspective on that?
Yeah, absolutely. So, millennials is sort of a big segment for us. Just in sheer numbers, we're talking about 350 million under 35-year-olds in the country today. And sort of the way they look at insurance is very different to sort of the older generation. Trying to position a critical illness cancer product to a 25-year-old makes no sense whatsoever. So, trying to understand that consumer is extremely important. Second is understanding the touch points with that consumer. That consumer is not accessible by phone to you. The relevance or the context in terms of where do you sort of attach or initiate or make that consumer aware of those products becomes extremely important. To what Alex said earlier, there is a whole dearth of sort of avenues available to sort of showcase the various product offerings that you have for that consumer, but it has to be just right. I'll give you an example. So sort of on the top end of our brim, we have products like fitness insurance or a backpacker's insurance, right? So typically these are products which incumbents would have thought these are too risky. Would I cover a backpacker who is voluntarily trying to climb up a hill and might sprain his ankle? Well, when we work with our channel partners, they tell us out of the 100,000 backpackers that came through, there were only sort of 10 reported cases, and the worst sort of case was of a dislocated shoulder. So sort of going back from that and realizing there are product opportunities where if you focus and create the right product and put the right touch point of the channel with the consumer, then sort of you can increase the penetration of insurance products to the young millennials and make it sort of more contextualized for them.
Great. Now we're going to close out with some bold predictions. I'm not going to give you the luxury of predictions 5-10 years out. I want sort of more specific predictions over the next 12 months. And obviously we'll be here, so we'll be able to come back and replay the video. But Alex, maybe we'll get you to start with, what do you think will be some of the biggest changes that we'll see in the InsurTech insurance industry over the next 12 months?
Sure. So I like the 12-month mark because it makes it that we have to be more realistic. I believe that when we go to underwriting and we think about, there was the question about, well, what are those additional factors, those alternative factors? And everyone gets excited about epigenetic underwriting and medical records underwriting. And once we're all connected and Apple is sending my medical records directly to the life carrier, underwriting is going to be so easy. But here's my prediction. I actually think we don't need any of that to improve underwriting. We can already start to correlate the number of rules and questions and all of the different things that we ask of agents and customers and start correlating it to the issuance of policy or what you rated a customer or eventually what premium you charged a customer. And certainly in P&C, the losses in a very short window to that customer. And the industry is caught up in the fact that we need all this new stuff in order to do that, but carriers simply have to look at their data. Now, they may not have access to it now because they're not using technology that's tracking every question, every data point, all the different ways that customers are responding to those data points. But they certainly know what they're asking. They certainly know what they're issuing. And I think just connecting the two is actually going to, in the next 12 to 24 months, radically change underwriting. Now, the regulators probably have to be on board, depending on where you are in the world, in your state, in your country. That may not be the most comfortable thing, but I actually think that's coming much, much faster than people are giving it credit for.
And Rohan?
Yeah, I mean, I think 12 to 24 months is possibly, you'll start to see a lot more innovation in the claims processing side. I think that continues to be one of the biggest pain points for the mistrust in the industry. We're already seeing a lot of cutting edge technology that's come into place, which is removing sort of these redundant processes, whether it's sort of knowing your customer better through sort of the FinTech intervention of understanding the credit of the consumer, running sort of third-party algos, which are understanding better consumer behavior on sort of fraudulent transactions, etc. So sort of we think there will be a lot more third-party services that will be available to the incumbents as well as InsurTechs, which can be sort of plugged in to improve the sort of claims servicing and fraudulent sort of mitigation sort of techniques over the sort of next 12 to 24 months.
Great, thank you. Peiru?
Well, I think someone was asking about on-premise to cloud. I think that's definitely one thing, right? Even not full cloud, I think on hybrid, I definitely do see that as a trend over the next 12 months. I think there is definitely a great push towards straight-through processing, not just in terms of claims processing and also in terms of self-service transactions by clients. I definitely do see quite a few insurers trying to go that route. And I think last but not least is how do they decrease the turnaround time to clients or their agents from perhaps now 3 to 4 days or even more. How do they move it towards instantaneous? I think that across many channels as well, across Omni channels and all this, I do see this as a huge push towards automation and instantaneous gratification. Yeah.
Great. Tom, last but not least.
I think we have some very, very exciting times ahead in the next 12 months, and of course also thereafter. We will see a lot of ecosystem platforms entering the insurance field, and particularly the ones that don't have anything to do with insurance yet, but just add insurance as a side service. We will see more of the tech fin companies, so of the big ones, the GAFAs, entering the insurance space. That's something which will be very exciting because from a consumer perspective, you know that if these guys get on board, the customer centricity, the customer journey, the customer experience will dramatically improve. And so I'm very convinced that within the next 12 months, I will open my mobile phone and buy insurance and I will say, wow, that's now really cool. And I'm really looking forward to this.
Me too.
Very good. So on that positive note, I'm going to ask you all to thank the panelists with me. So join me in thanking them. Thank you. And look, I have noted there are a number of questions still on the panel here. Certainly, well, we presume that many of you earlier on indicated that you work for insurance companies. I'm sure that the panelists would be pleased to continue the conversations and answer some of those questions over the course of the afternoon and tomorrow. But thank you everyone for joining and enjoy the rest of the festival. Thank you.